Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update number 228 for Monday, 22nd of June 2026. I hope you're well. I hope you've had a good weekend and are enjoying this already eventful start to what is another eventful week in markets in 2026. If you're joining us live in the room, it'd be good to know that you can hear my voice and you can see the slides and the technology is working in our favor. That always helps. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you over the next 30 minutes, looking at strength and weakness within the FX indices and commodities markets, having a look at a few charts of interest you might want to add to your watch list, and then a look at the live markets. Okay, it is not a signal service. There are no trade recommendations. It is just me sharing with you what I'm looking at the moment, which might be of use or interest to you in your own analysis. And if you want a little bit more education as well, there is a special deal going on until the 30th of June, okay, for the next week for a special price for both VTP Stage 2, the swing trading course, and Stage 3, the intraday trading course, okay. You can see the details there. The QR code will take you to it, or eventually you can use the bit.ly code if you wish to do that, or ping me for some pointers. All right, so let's switch across to the indexes, okay, overall. So I appreciate we're going to probably overrun a little bit today, but that's just because I've got so much to share with you. This is my indices profile. So, what are we looking at here? You've got Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and oil. So oil on the weekly, you can see it continues to drift its way down towards, in the sort of $75 area. Okay, looking to see whether it'll get a little bit lower towards that weekly 50-period moving average. All right. So, even with the shenanigans of the weekend, oil still continues to work its way lower. All right. So that's a kind of probably a reflection of the overall market sentiment. Interestingly, last week, if we look at here, okay, on the Dow, we printed a kind of a nice bearish pin bar. Remember, one swallow doesn't make a summer. That doesn't mean we've topped out or anything like that. But I was curious to see how that has worked its way out. Last week was kind of, it was a bullish on the NASDAQ, but I wouldn't exactly say it was giving anybody any excitement. What we saw in the S&P 500 is a little bit of a doji. The Russell kind of, I would call that a momentum pin bar, actually, in the way that there's still the most of the wickets to the downside. It's still pushing us to the bullish side. Okay, certainly what we saw with Nikkei as well, that continues. All right, so that kind of continued sort of yen weakness against the dollar, that is reflected in that, the way we see that. Look at DAX, to me, hasn't really reflected differently from what I've been saying for the last few weeks, namely that every time it gets up to around about 25,000, it seems to struggle. See there, every time it gets up, it kind of falls away. Last couple of weeks, we've been above 25,000, but not with any particular strength or vigor, is there really? It's not, not exactly something to get terribly excited about. Look at that on that daily chart. There's a lot of wicks to the north side there, isn't there? So, as I said, once it gets above 25,000, it seems to struggle. It's almost like it's in rarefied air and it runs out of lift, okay, at this particular moment. That's the way I look at that. Close to home, if I look at FTSE, I still see FTSE personally in that kind of big coiling symmetrical triangle. Now, invariably, symmetrical triangle is a continuation pattern. Classical technical analysts would say, well, actually, Paul, we'd expect it to break higher and go much, much higher. And I think lots of people would love that if we did. The question is, what would be the catalyst? And that catalyst would really have to be the new the new government, and in particular the new kind of chancellor and perhaps the new business secretary. You may well have more confidence in the ability of the new government coming in than myself. Personally, I don't really have a great deal of confidence in them to be able to do anything remotely interesting. But we will wait and see. And as I said, I think price still continues to coil up there until we get some clarity on who's the Chancellor, who's the Business Secretary, what's Burnham's policies, because he's not really showed himself to have any real policies. Everything he's mentioned in his run-up to the by-election got kicked into the long grass, and he withdrew or U-turned on it very, very quickly. So we're going to start to see him come under a great deal more scrutiny, and let's see if that basically makes him or breaks him. We shall wait and see. But I don't see any particular joy there for myself at the moment. If we look at a few commodities, gold, the weekly chart, we have continued to drift away low. And last week we closed again beneath the weekly 50, didn't we? We closed beneath that weekly 50. All right. Is that a case of the sort of that overall gold trend has flipped, or is this just a little bit of profit taking break before we work our way higher? I think I need to watch that. There's nothing really telling me there on the daily, on the weekly chart. Even the daily chart kind of having broken through those layers, it bounced back up and has drifted its way lower. Okay, so my look is that I think maybe we work our way down, perhaps create a double bottom, and then we get to see what goes on with gold there. Looking at silver. Silver on the weekly chart there, what we can see is silver is also at that kind of weekly 50. Look how it's acted as kind of support there, right, for the last few weeks. Can that hold? All right, can that hold? Will that give it some? Certainly, it's beneath. I would say that's beneath the daily 200. We talked about it putting in that daily bullish key reversal. Worked its way up to $70 and then $70 in the 200 period moving average flipped, right? And we've seen our work our way lower. So it's in a little bit the same pattern as gold. Okay, we're waiting for a catalyst for that next particular move in whatever direction that offers us. And you might say the same about Bitcoin. Okay, Bitcoin on the against US dollar on the weekly chart. It is sat down here on the weekly 200 period moving average above 60,000. Okay, look at how it's just sat its way there. If we go down to the daily chart, okay, is that that it's it looks, maybe you might say it looks a little bit more bullish on the daily chart than on the weekly. You might be saying, well, okay, Paul, let's see if bump. Okay, is that a kind of a line of support that can hold, or is this just going to be a counter trend line break, or are we building a bear flag? All right, but at the moment that is holding at the moment. Okay, so as I said, it looks a bit more bullish on the daily than it does on the weekly chart, but I wouldn't necessarily be getting terribly excited either way about it. But, as I said, we've looked at Bitcoin, looked at silver, looked at gold. Of course, they are all relative to the US dollar. So let's have a look at dollar, and we're overrunning a bit, so we might have a quick look at yen, and we'll finish on sterling, see what the scores and the doors are there. All right, so this is my dollar profile. So Aussie on the daily, euro on the daily, sterling on the daily, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, and then of course the dollar index. Okay, so when I'm looking at the FX markets, I want to see what the score is with the dollar index. Here we are on the monthly chart. Okay, we had been in this kind of range around about 100 to the north side. Okay, and then 96 to the south side. But if I go down to the weekly charts, interestingly, we bounced up here and it looked like we were going to sort of drift our way off the big 100 number, which we'd struggle with. But then, as I said, you can see how we played out last week. Okay, as the interest swung from the war to US interest rates. Okay, the battle against inflation in the US. And if we go down to the daily chart, I had looked at that kind of bearish engulfing candle here, okay, that we saw on the 11th of June, drifting lower. I think it said, watch the 20, all right, watch the 20, PO20 there, and bang, we can see how we've worked away way up above 100, okay, up there towards around about 100, 175. That is still I look at that as a bullish dollar trend, okay, bullish dollar trend, okay, that's the way I look at that, and I don't see anything to remove that at the particular moment, especially when we see things like bang, euro dollar here, okay, we can see euro dollar on the daily. That has worked its way down. It broke that kind of 115 level, which had been significant support. We've worked our way down beneath it there. Okay, that to me on the daily chart is still kind of euro weakness, dollar strength. That's the way I particularly look at that. And that's pretty much reflected elsewhere. Okay, so Aussie weakness, dollar strength, Kiwi weakness, dollar strength. dollar strength, Canadian weakness, dollar strength, yen weakness, dollar strength, Swiss franc weakness, dollar strength, sterling weakness. Okay, so this is why I always want to know what the dollar's doing first, because it sets the tone. Okay, it's the granddaddy of the FX market.